How's it going out there? It's Wednesday, May 18th. My 50th birthday. Yes, I like to advertise that everywhere, so feel free to send me gifts if you like. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. Just kidding about the gifts. It's going to be hard. You can be like, Frank, give me a stock pick. Everything's down. We're not sending you anything. It's pretty crazy. We enjoyed a nice rally yesterday, though, before today. Like I said yesterday, Daniel's on vacation this week, so you're stuck with me. And this podcast is about you. I say that a lot. But I'm here to answer your questions, which is this week. I'm going to continue that next week as well. Watching Target get hit today. Walmart yesterday. They're supposed to be the safe havens of the market, but I want to start taking more of your questions during these times. So 7 weeks in a row that we're down. We might go through 8 weeks. I thought we were going to start off and have a really nice week, which we did on Monday. And then Tuesday, we see this Target warning, which is, and then Walmart the day before. But the market's not really shaking this off. And even though safe haven is getting hit. So, with times like this, I want to be there for you. So I took questions yesterday, taking some today. I'll continue this format next week as well, even with Daniel. So sending your questions, frankcurzioresearch.com. Like I said, I'm here for you. It's tough times, but during these times when you see the market as bad as it is, even a company I'm looking at, Target, which is a good name, we've had in our portfolio, we're up a lot on. We did not see this coming. Nobody saw this coming because they didn't warn. I'll explain that in a second, why that is significant. But even the places that usually work during times like this that haven't got hit hard, they're starting to get hit hard. So look, we want to be there for you. We want to let you know what to do because times like this are the times that when you pick out some of these stocks and pick the right names, they're down 20, 30, 40%. It's one of those times you're going to look back like, 2009 March bottom, the bottom during the COVID crisis in March into April where, holy shit, I wish I bought there. We're getting to that point if you have a 12 to 24-month outlook. Inflation's here. I went over all the risks and everything, but man, looking at where the market is, it's pricing in death. And there are positives in this market. We're seeing the negatives. We know the negatives. We talk about them every day. I'm not going to mention them again with the inflation, all that garbage, with the Fed punch bowl being removed. Maybe I will mention them today and war and stuff like that, everything going on. But when I see this market and how many stocks have been absolutely murdered, look, we are going to see inflation moderate. There is going to be a shot to buy. It's not going to be, pretty over the next few months, over the next 3 to 6 months, but some of these levels where stocks are trading at could offer you unbelievable returns. Unbelievable returns. I know it's hard to say because you're down your portfolio. I'm down my portfolio. But these are the times and markets that you want to invest in, especially if you have a long-term outlook, because you're investing in everything of something what? We're looking at inflation. It's a major concern. We highlighted that for 2 years of why it was going to be a major concern and why it was going to be like this, just like it was in the 80s and how crazy it is. I didn't think the market would fall as much, but when you're looking at inflation and where it is, that's going to moderate. We're going to see it moderate. I'm going to break that down now, why you're definitely going to see it moderate a lot faster than expected. And that is going to be the catalyst where the Fed hopefully is going to raise rates enough where they start cutting by next year. But investing in some of your favorite names right now, it's going to be a little painful and just picking away. But where these things are trading, they're trading at levels like it's the biggest bear market in the world, ultimate chaos and everything. And what you're seeing is deleveraging. And when you see deleveraging, you see a lot of great names, right? You're like, why is my name that just reported great earnings, why is it down so much? It reported 2 great quarters, it's down 25% like everybody else. It's deleveraging. Okay, people are on margin. And when they're forced to sell or pay their taxes from last year, which they probably did good in the stock market outside of November, December, you're going to sell a lot of the good names. It's forced selling. You're forcing to sell even the good names. And that's why you're seeing a lot of great names, great names. And even after today, it's more like 22, 23% of the S&P 500 is now trading below 10 times forward earnings. And a lot of those companies are paying dividends. A lot of insiders are buying. They're going to see massive buybacks now that they just reported earnings. They're going to stop buying back their stock at these levels. And they are growing earnings, some of those companies. Not all of them, but they're all expected to grow earnings. You'll find some that expect to grow earnings 10% plus. Even the Microsoft and the Apples. I mean, maybe they get hit a little bit further here, but there's a lot of names out there that are doing the right thing. They're doing okay, weathering the storm. That shouldn't be down 30, 40%, like so many names we're seeing across technology and in the markets. But anyway, let's get to some of your questions, and I'm going to address a lot of these things I just said now, starting with Josh. And this is Joshua. He goes, hey, Frank. Thanks for all the great coverage on the market individual names. What are your thoughts on emerging markets? Valuations still lower than the U.S., and they've fallen further. Any interest in investing overseas? Thanks for all the information and teachings you provide. Still wishing I listened to your recommendation to sell some positions in February 2020 and to buy in December 2008. Much thanks, Josh. I mean, you can go over the good calls, and I've had lots of good calls, but this market sell-off, what I'm most pissed about is sounding the warning and sounding that alarm in November, when the Fed did about face and say, guys, this is a fundamental change in the market. A lot of people don't understand what it means when you have an inflationary environment. It's something the Fed can't control. The only way they control it is by taking money out of the system, which is almost forcing a recession. That is the biggest risk in the market. I didn't think that we'd see the NASDAQ fall, and this is just since March, it's down 25%, the NASDAQ. I mean, I didn't think we'd see at this level, even though we'd have trillions down that have to be unwound. And I wish I did. We did sell some positions. I wish I sold a few more. Even Target. Target was a big winner for us, and massive, a great company that we bought right at the bottom of COVID and said, these guys are going to get it done. They're one of the companies that the government selected. Target could be open, Walmart could be open, Home Depot. We had all those, and we sold off a couple of them. Even Costco did very well in all those. Costco and Home Depot we sold a little early, but Target was one of the few that we still had in our portfolio. Right? We sold off Walmart for a game as well, and of course, 25% hurts. We're up a lot in it, but it just shows you how difficult this market is. As for international, I would stay away. I've had some brilliant people come on this podcast, brilliant people I know have been telling me to invest internationally and have gotten destroyed. It just seems like even with times like this, that market gets hit worse. And when you have a growth environment, U.S. stocks do much better than international stocks. You could find a chart from a time frame that you could bring up and say, Frank, what about from August 1st, 2017 to this part? And you'll say how stocks in whatever market you're showing me that outperform. But it just, a lot of these companies in the S&P 500 have a lot of exposure to international, right? Yeah, so you can get China exposure through Yum Brands. There's so many different companies where you can get exposure to Russia through company. You can see how many companies are cutting their Russia exposure, right? And how many companies have exposure to international markets where you can invest here and be safer and understand these markets much better. They're more liquid. Instead of investing in a fund. I'm not telling you that it's a bad idea, but listening to so many people tell me, like, Russia was a buy, China was a buy all these years, and they may have been right for a very short period, but getting absolutely freaking wrecked. And when I say wreck, right now, when you look at the markets, guys, everybody's getting wrecked. Unless you short the market, unless you're buying puts in Ginny's newsletter, which she's absolutely freaking killing it. It's a 100% winner, like every month that I see her logging in, again, for Money Flow Trader. Which is buying long-dated puts on these things. So you see a 20% decline, you're going to make a fortune, and she's seen 30, 40% declines in these things, and these positions are going up in a month. They're going up 100%. I mean, it's unbelievable, right? This is what happens when you protect yourself and you provide insurance. Something, again, that hopefully a lot of you have taken advantage of that newsletter, and you're happier than ever, but I know a lot of people just, insurance and hedging and stuff, I get it. It's so easy to go and buy a stock any place. It's even, it's not even that easy to buy crypto sometimes, but it's you're not going to have that mass market when it comes to, some options, yes, and there's people love to trade options, but man, it's nice to see that newsletter killing it. But getting back to the emerging markets, it's they underperform. And I've seen these people get absolutely crushed, and trying to listen to them and figuring it out, I'm like, I just don't get it. Why invest over there when you have so many opportunities here? And again, I'm talking about very smart investors, and you have to be smart because you're covering international stocks, and people aren't going to cover that unless they're familiar with our markets and why that's, because you always have to compare and say that's a better market than over here. But the point I was trying to make before is when it comes to these markets, everybody's getting killed right now. Everybody's getting crushed. Everybody understands the risk. Everybody knows what's going on. The problem with international stocks is they got killed when the market absolutely surged. And that was frustrating. And, when you see China coming down, our stocks doing, killing it. When you see Russia getting crushed before the war, even before the war, and, U.S.-based stocks are killing it. It's tough to be a manager of something like that and say, hey, you need exposure to this, and then the opportunity cost, you're getting freaking, wrecked. You're getting run over by a truck. Where right now, you could be like, well, I thought Target was going to work, and it didn't. I thought Walmart was going to work. I thought retailers. I thought energy stocks. I thought energy stocks are working right now. It's still working. Energy, one of the few. But when you look at retailers across the board, or if you're looking at healthcare companies that usually do good, right? You're seeing healthcare and that inflation. It's so funny when you look at an inflation chart, guys. If you look, you're seeing like massive inflation in almost everything right now. But when you look at healthcare, it's steady inflation over the past 50 years. Just a constant line going up, 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 up. And the only thing that's worse than that, much, much worse by far, is tuition, which that's a rant for another day, because these asshole schools never get blamed for the amount of money they charge and how much control they have over students, not to mention what they're teaching our students these days, which we're finally realizing is crazy. I mean, you talk to any kid that's young and they hate the world, right? They hate America. They think it's the worst country in the world. They hate us. Right? That's what they're teaching us. Not only that, I mean, the rate of inflation for those guys, holy shit, right? Everyone wants to blame everybody else about student debt and to students. It's the parents' fault for not talking about them. It's the whatever. I mean, the schools have to have some kind of responsibility here. I mean, the prices that they're charging these fucking kids are a joke, to the point where it's not worth it to go to college. It's not worth it to spend, $200,000. I mean, that's how much it is, $200,000 to go to a Division I school if you're not in state. When all costs are said and done, that's what it's going to cost. So it's, you pay $50,000 at least $50,000. I mean, you might get away with $30,000 here, $20,000 here, but it's insane. They just keep going higher. But getting back to the international markets here, and sorry, that is a rant for another day. For me, and doing this for such a long time, the opportunities have always been in the U.S. Will there be a time to buy Russia stocks? Yes, that are trading at a PE of 3. Well, you told me to buy them when they were PE at 15 and our market was trading at 24. You told me to buy them when they were at 10. You told me to buy them at a PE of 5. Now they're at 2, 3. I mean, you're getting wrecked. You're buying cheap stocks with limited growth. And you want to make sure you have that growth potential. You do have some of that growth potential in China, but when China decides to have a zero policy for COVID and all of a sudden, everyone's going to die from COVID, even though we all know the facts and figures now, and most people are going to be okay if they get COVID. Very few deaths, right? We know who it impacts. We know all the statistics, but I still see people driving with massive fucking cars by themselves. I don't get it, but that's okay. Someone scared the shit out of those people and, whatever. You can thank whoever you want for that. But in China, it's even worse. I mean, for them to go to the zero COVID policy and they still have businesses closed there, right? Japanese survey yesterday, you've seen a lot of these companies, they're saying, oh, well, we're open, and China, they're not open yet. And that's causing more supply chain concerns, which you're seeing even in these warnings. So for me, the international markets, look, I could be wrong. For me, every time I've tried to invest in these things, I've lost money. And not to the point where I lost money where I put money in and they might have gone up a little bit over time, but if I had them in US-based stocks, I would have significantly outperformed. And that's what you have to look at, because when I have US-based stocks, they go up a lot higher than these international markets. And when the market's like this, a lot of people rush to the US, and those markets get hit a lot harder than they do in the US. So I would stick, even to the S&P 500, the Dow components and things like that. You're probably better off, since even Boeing, all these companies, they especially Dow components, they have a ton of international exposure, yet you have all the regulation, all the numbers that, you could rely on the U.S. So these people got to go to jail if they're not reporting the right numbers or lying about it. Why go international with so much risk? And just from a risk reward standpoint, to me, it's never really been worth it, other than if you're a trader, and sometimes it's never been worth it to actually hold it long term. You put a chart up at the S&P over 10 years, 20 years, 30 years, 40 years, 50 years, compared to almost every single market there, and we've outperformed. And significantly. So again, you could find one little time period that maybe it didn't happen, just like people do with gold sometimes, or even gold's been horrible compared to buying the S&P 500 over whatever time frame. And again, you could pick the 10-year time frame that it worked for gold, 2002 to 2000, whatever, a 10-year period. But overall, for me, I stay away from the international markets because I can get that international exposure here through some of the greatest companies in the world that have much better balance sheets, and that I could actually rely on their financials. So hopefully that helps. Next question, and this is from Jack. It was, Fred, what did you think of the Walmart quarter, and should we be buying the stock on this pullback? That was Jack. I'm going to throw a target in here because earnings were terrible for Walmart. And I saw Kramer get on there. I think he interviewed the CEO, and he was pissed off. He's like, this is bullshit, because I think he interviewed the CEO, and he has Walmart in his investment club or whatever. And I get it, right? Because he was so surprised. He's like, you're telling me one thing and this happens. And he used to have a wall of shame when I was there, and he's had that for a while, and I don't think he does it anymore. But I get it. But let's look under the hood a little bit, because look what happened with Target. And you see margins get hit for both of these companies because they can no longer pass on the higher costs to consumers anymore. And a lot has to do with energy, where energy prices are spiking again. And now people are just throwing in the towel. I'm seeing it. I'm doing it myself. I'm telling my kids, hey, you're not going to Starbucks a lot. I know it's easy. We drive all over the place, and sometimes it's easy to just get something on the run, but we have to cut back. We just, I'm cutting back on food because I don't want to pay. I stopped by Wendy's. It was one meal and just a double burger I got, right, with no fries or soda, and trying to behave, just burger without cheese. And it was like $18. I'm like, holy shit. The cost to go out to eat now is insane. It really is. You're seeing it. Now, we're paying over $100. You know how much we drive. I tell you guys know everything about my life. I'm driving all over the place, so I'm moving to Jacksonville and building a house there. one thing that's held up is houses, and we're going to see that come down. Probably not in not in Florida, Texas, and low tax areas people trying to move to in Nevada and stuff. But you're going to start seeing that. And you're seeing it with the home builders, and you're seeing that crack a little bit. But people ordering houses, they're like, they're seeing cancellation rates at 7-8% now, which, people were dying for these houses. They were lined up. They couldn't get anything for months, and now you're seeing lots of cancellations. So you're looking at Target and Walmart. I'm going to throw them both in here. They saw pullbacks in discretionary spend, so discretionary items. And again, mostly due to surging gasoline prices. The cost of fuel and freight are insane. Walmart talked about it, but Target, the CEO, came on and said it's going to result in an extra $1 billion in costs for energy, for fuel and freight. And they said that they did not anticipate. That's why you're seeing the stock sell off tremendously. And someone asked the Target CEO, why didn't you warn between quarters? This caught us by such, they were like, usually companies, when they're having a bad quarter, they may say, hey, look, this, they warn, right? And, it's like a pre-warning and saying, hey, just prepare. And usually their pre-warning is worse than what comes out. And, when they report, they're like, oh, they did better than the pre-warning. The stock will go up a little bit. But usually when companies warn, they fall sharply. So they asked the CEO and said, hey, why didn't you warn between quarters? Because you've done that many years ago. And he said, it was remarkable. He said, this happened so fast. They didn't get a chance to. This is how quick customers like that, consumer sentiment can change. And when it does, look out. Retailers know that more than anything. Everybody wants something. They want it. And then they build up this massive amount of inventory. And all of a sudden people are like, you know what? That was pretty cool, but I don't want it anymore. You don't know what changed sentiment, but it's just like something going viral. You can't say, wow, I'm going to produce a video. It's going to go viral, right? That never happens. It's the things that go viral are just weird. You don't know. Right, it's so hard to understand that we try. That's why analytics right now is such a big deal. That's why Facebook is turned $1 trillion company, and now that got cut in half, and the social media companies, because you're learning more about the consumers. You're trying to understand them, but the change in sentiment is almost impossible to predict. It happens very, very quickly, and it's happening now, and it happened with Walmart as well. And that's why when Kramer was like, I was so pissed off, I talked to the CEO, and this is a great investment. He probably added to his position, or he has his portfolio, and then they come out with the warning. And they blow the quarter, and he's like, what the F? What the fuck's going on here? Well, what's going on is he wasn't lying to you a month ago. Neither was Target. They're not lying and say, holy shit, what's going on? A month and a half, 2 months ago, they were just like, whoa, out of nowhere. And you could see 2 months of that quarter strong, and all of a sudden nothing in the last month of that quarter, right? The first 2 months of that quarter, last month could be holy shit. And that seems to be happening, where what have we seen? Inflation rise tremendously. The Fed raising rates, right, last couple months. So, and now you're seeing a huge rise in energy prices, and that's enough for people to be like, okay, enough's enough. I can't afford this shit. Holy cow. I mean, the amount of money that's coming out of my pocket right now, see my savings dwindle, it's getting a little crazy. And that's the reality. That's the reality. The consumers at the same time, significantly cutting back on spending. What happens? It leaves these companies with inventory concerns. And let's talk about that real quick, because this is major, guys. You need to understand this, and we could probably make a lot of money off of this, because we have companies like Ford, GM, Target, Walmart, Best Buy, every semiconductor company that produces components that go into the billions of electronics. You furniture companies, kitchen appliances, sporting goods, material companies, almost every retailer. What was going on over the past 12, 18 months? These companies were seeing unbelievable demand because so much money was injected to the system. So much demand, massive, massive demand, but they couldn't get enough supply to stock their shelves. Everything you ordered, if it's golf clubs, it's a mattress for me, those two things took 6 months, more than 6 months. Right? If you want to, how long has Ford said? For 18 months now. Hey, we got the EV, the Ford Lightning. Have you seen one on the road? I haven't. How many people have gotten? A handful? All these EV things. This story for Ford and GM has been here for 18 months. And longer than that, but 18 months. Like, we're producing all this shit, all these EVs. We're going to take down Tesla. Where are they? Where are the EVs outside of Tesla? Have you seen any? I haven't. I haven't seen one outside of Tesla. Yet, they've been promising us for 18 months that, hey, we're here. This is it now. They've been promising freaking 3 years. But now it's supposed to hit. Everything's great. Supply chain concerns, everything, right? So what have these companies been doing? They've been doing everything they can, right, over the past 12 months at least, or everything in their power, spending billions to build more factories, use better software. Intel's opening up more fab plants. You've seen, Jim saying we're spending $30 billion here, all this craziness. on EV, they said first it was going to be 20 billion, 30, I think it was 10 billion, then it was like 22 billion, now it's 30 billion as of last quarter. They're spending on new technology and everything, all this stuff, software to fix their supply chains. This way they can get their goods in their store to meet that massive demand. Now, demand's starting to tail off. They're tailing off when, holy shit, we're starting to get that inventory in now, and inventory levels have risen, right, for many of these companies. So now we're seeing big warnings, massive warnings. I mean, it's the worst scenario. I saw this with Taiwan Semiconductor in 2017. They decided to go all in on chip production because crypto was booming. And they said, wow, we got to produce a lot of these freaking chips. It's absolutely booming. We're seeing massive demand. It was like, it was still accounted for less than 5% of total profits, I believe. And it was like, whatever it was. I mean, it was $200 million in sales they were generating like right away. And they said, okay, we got to allocate. And remember, we're looking at the semiconductors, which have, their capacity, at 100%, they had like, hey, we have 5% capacity right now in 2017, 7%. Let's use it for this and build it. And then they built it and crypto absolutely crashed and no one was buying these chips. And they said, we can't do that anymore, right? Because now we're sitting on inventory. What are we going to do with these freaking chips? We got to sell them for like, 60, 70% discounts and get them out of here. Because, outside of NVIDIA and gaming, you have massive amount of chips for these super crazy computers that you really didn't need now. And you're coming out with next generation in a couple months and years and stuff. So, that's what happens. But you look at a time where inventory levels are rising for these companies, now demand's tailing off. So we're probably going to see some big warnings going forward because this happened so quick, especially with the latest surge in energy prices. And that's going to result in a lot of names that, claim they solved their supply chain problems to see, similar declines when they report or warn that we saw with Target. I mean, that's if demand slows, right? Because they're sitting on massive inventory, meaning they're going to have to discount that stuff tremendously to sell it. It was in high demand 2 months ago, a month ago. I mean, you don't see Target, right? Target and Walmart come out. These guys have a better indication of the consumer than almost anyone. Access to hundreds of millions of consumers in the U.S. alone who shop there. And for them to say, holy shit, this caught us off guard, and we didn't see this coming, where in the last 45 days of the quarter, basically people just said, we're not buying anything anymore. I mean, holy shit. And I said a couple of categories, outdoor and stuff like that, but most of the categories across the board, they're saying discretionary, they're just surprised that everyone's cutting back so much. Now, the silver lining here, which is important, the silver lining. We're about to see inflation fall rapidly. Not with food and energy. I covered that. I told you why it's not going to happen rapidly. It's still months, perhaps quarters away. But we're going to see inflation fall across the board since companies no longer have pricing power. They can't raise the prices right now. It's because no one's buying it. They try to raise those prices. Now they're like, holy shit. How often have you heard that we have to discount things to sell them? Target and Walmart just said that. We haven't heard that since COVID. Because there was so much money in the system. We haven't heard that. I mean, airlines raised their prices by 17% month over month, not year over year, month over month. Think about that. And they're getting that. That's because people are traveling and I want to go on vacation. I haven't been on vacation in a while and I want to go because the last 2 summers were fucked by COVID. I need to go. I get they're paying for that, but they're not going to pay for those discretionary items they really don't need right now. And again, Target, Walmart, these are companies, right? And we're hearing this from the 2 biggest big box retailers in the world who have the best supply chains, the best management teams. And these guys got it wrong. The next shoe to drop is restaurants. Any restaurant that's held up this year, probably great shorts right now because the consumer is cutting back. But outside that, we're going to see inflation fall rapidly. That's the silver lining here. That's what you need to see. The only way you see that is if investors are like, I am not paying these high costs anymore. Because then you have to lower prices. And that's what Walmart said. That's what Target said. That's a great thing. That's a sign the bottom is close. And a lot of this other shit, and I know people are seeing it going, oh my God, how is this going to get better? We're down, accounting for a lot of these risks that we talk about every single day. But we're going to see inflation come down sharply over the next couple months, not in energy. We see it in the core. We're not going to see massive increase, maybe a little bit through summer, another increase be passed through airlines and traveling and hotels, but people are going to start, once summer's up, after that, you're going to see a big decline in inflation numbers, both CPI and PPI. When that happens, that's going to be the opportunity because the Fed, hopefully, over the next few months and few quarters, are going to be raising rates aggressively. Again, it's going to be choppy and painful. There's going to be ways to make money off this market. considering a lot of stocks are down 40% plus from their highs. But start picking away at some of those names. Over 100 names, S&P 500, like I said earlier, trading below 10 times forward earnings. That's a great thing. That's a really great thing. But when you're looking at the market, that's the silver lining. We'll see inflation come down because we see for the biggest retailers in the world saying, hey, holy shit, they're not buying our stuff all of a sudden. That's going to happen across the board. That's not going to be limited to the two biggest retailers. Right? Maybe you have like the Lululemons and stuff that are able to keep a little bit of pricing power, but are they going to maintain that huge multiple? I don't know. I don't know about that, especially when everyone else is one. They said apparel is actually pretty strong, outdoor stuff pretty strong, but still, Under Armour warmed as well. Nike, I mean, look out. But Walmart, Target, they're the bellwethers. They have access to data, hundreds of millions of people. Nobody knows the customer better than these guys. They're saying loud and clear, consumers are cutting back on spending. We knew it would happen. We were surprised it took so long with inflation running wild and the Fed moving the punch bowl, but be careful buying those survivors right here, companies that weathered the inflation storm, especially, this year to date, because that's the next shoe to drop. Again, the silver line, we're going to see inflation fall sharp in the months ahead. It's going to be the catalyst to buy cheap stocks that are still able to grow earnings, which, again, there's a lot of names like that, or names that are already fallen 30% plus, which is almost every name in the NASDAQ right now, and most stocks across markets. But I'd be careful. Even some restaurant stocks have held up well. That's going to be the next shoe to drop. Chipotle's and things like that. Are people going to pay that much for food? No. If they're cutting back for just regular items, they're going to come back on food as well. Meaning that these companies are going to lose their pricing power. And once they do, look what happened to streaming. Those guys lost their pricing power. Look at all streaming across the board. When you lose your pricing power, these stocks fall like a rock. So the ones that have held up well, be careful. I think restaurants will be the next shoe to fall. However, there's lots of names that are pricing this in, trading cheap, are going to grow earnings. It's going to be difficult over the next quarter or so. But you see inflation a little bit all over the place. But now the trends are in place where they're losing that pricing power. We need to see inflation come down. And now the writing's on the wall. That's it. The two large retailers, both back to back, 2 days in a row, both got nailed, said the same exact thing. Holy shit, we can't believe how much the consumers pull back. Why? Because they're not paying those higher prices anymore. They're done. That's a good thing. Short term, it's going to be a negative for the markets. You see stocks come down, but it's going to provide even better valuations for you to buy. And it's going to be, I would say, 2 years from now, 3 years from now, you're going to be like, holy shit, buying at those levels was absolutely amazing. It's going to be choppy. You can go down a little bit, but if you have a long-term outlook, right now is the time. Let's take one more question. Frank, I know you've been bullish on the metaverse, and investment firms have cited this would be an $8 trillion plus industry. However, what are the chances of the metaverse being a fad? Or it doesn't get widely adopted? Not to pour cold water in your thesis, and I do believe in the metaverse, by the way. You told me when it comes to researching, you need to look at both positives and negatives of every stock and industry. Thank you. So that was James. That is an awesome question. And I love the fact that you said that, because for me, I'm always looking at the other side. When things are terrible right now, I'm highlighting the positive. When things are positive, I'm saying, hey, this could go wrong, this could go wrong. You're going to find a few people outside of the perma bears that told you there was inflation for the last 40 years. I mean, they're 70, 80 years old. They woke up. Since 7 years old, they've been preaching inflation and the dollar's going to crash. You could go back and look. It's insane. I'm not talking about those. But, while the market was going up, I mean, I created Money Flow Trader to take advantage of markets like this. And it took 2 years of painfulness where the market still surged and it was hard. Now people thanking me. So for me, I always want to give the other side, and I'm always looking at the other side. I don't want it to be this, a whole fluff thing. Oh, this is great. You got to get in it. But let's talk about the metaverse a little bit. Major League Baseball announced it's investing in NFTs for the metaverse. Real Madrid say that they're building a virtual stadium. WPP, the largest advertising agency in the world, is going all in the metaverse, signed several deals with certain metaverses. Accenture just said that 150,000 of new hires are going to be spending their first day of work in the metaverse. Kraft Heinz is using the metaverse to solve its supply chain problems. They're working with Microsoft with their software to provide that technology where the manufacturing facilities, they have virtual versions of them in Kraft, and the companies, gives the company's leadership a better view into how they work and what needs improvement through virtual. Dentistry, big article talking about the metaverse, how they go into the metaverse. Again, you'll have to go to the dentist, but still just different things within the metaverse where you could see different things before you even come in and what kind of things that you want and stuff instead of going to the office 3-4 times before you get stuff done. And this past earnings season, more than 30% of the companies in S&P 500 mentioned the word metaverse in their recent conference calls. 30%. Everything I just said there, every single thing, right? All of that, just these things that I just highlighted, everything I mentioned happened over the past 7 days for the metaverse. The past 7 days. These aren't stories I'm pulling from months ago and years ago, and holy shit, this is going to happen. This is just the past week. This is how big and how quick. As quick as consumer sentiment changes and you're seeing the spending habits change, is as quick as people are getting into the metaverse. The metaverse is going to be the new internet. It makes sense. It makes sense from every perspective. It's what the people want. It wasn't meant for 4 or 5 companies to own your pictures, to own your data, to kick you off sites because you have an opinion. I'm not talking about opinion where you're like, that's dangerous, where you're looking to hurt people. I'm talking about just for a political party that you vote for, that you believe in, that you state, for reporting facts on China, from people who had data on China saying, we know this virus started in a Wuhan lab and reported and got thrown off. The Biden laptop, New York Post, got thrown off of social media. Now it's fact. And that goes for both sides. It doesn't matter what side you're on, but not being able to express your opinion when you're doing research because you're not on the right political side. Was that the way the internet was supposed to be? Where these guys are so rich, they're making massive donations to different parties? It's amazing. It really is amazing. The idea is to get you pissed off and angry, right? Yet, what does that mean? It means you're going to post more shit and go on social media and these guys are going to make more money. That's why they donate. They don't donate for a cause that they truly believe in. They donate for something that's going to make them filthy freaking rich through their company. That's why they're donating dollars. That's why they do this. Whatever agenda that is. Because at the end of the day, you're going to retire. You're going to be sitting home with a massive freaking nest egg and you don't give a shit about what's going on. You'll be someplace in Wyoming and Jackson Hole just hanging out with your freaking mansion while everyone, we have chaos. They don't care. Was that the internet? Is that what it was supposed to be? No, it wasn't supposed to be that. It's supposed to be this amazing utility, this amazing service where people control their content through NFTs and the blockchain. It's what concerts are going to take place going forward. Yes, I love concerts. I love being there. But when you're seeing 150 million people tune into Travis Scott on Fortnite for a virtual conference, what do you think that, a virtual concert, what do you think every single person in the music industry is thinking? Holy shit. I go to these concerts. I go to a million different venues. And what is it? 50,000, 30,000, maybe 60,000, 70,000 for the big ones. Get even bigger ones overseas. But you talk about 150 million? Holy shit. Hey, that's the future. You'll be able to meet people online, real people, not bots. Every person's going to be real. Online dating or whatever. That's the way it would take place. It's not just this small idea where Facebook's like, hey, we really need to do this and change our name. It's 5th, 6th largest company in the world. Who does that? Total, like, this is our core business. We're changing our core business because here's where we're going. That's where they see social media. They're smart. They know everything about people. They're in your living room every second of the day tracking you, even though you don't know it. But they know this is what the people want. They know this is where the next generation is going. The younger generation is going. This is what they want. I mean, to have the lockdown on social media, yes, you're getting threatened by TikTok now and things like that, but still Instagram and everything else, and Facebook, and really change and go into this, it just shows you with the data they have of how important this is and how much they believe in this. But it's a lot more than just Facebook, who's, again, knows more about those 3 billion customers and posts everything about their lives every minute of the day online. But Apple, Nvidia, Microsoft, Google, Amazon, all investing in the metaverse because they have to. It's threatening their existence. Yes, they're still going to be here. Yes, they're big companies, but these are the companies with hundreds of billions of cash on their balance sheets. And this is where they're investing. Major retailers, this is where they're going into. See a massive amount of capital being raised by metaverse projects in the billions, which is incredible given the current market conditions. Usually you see everybody pull back. Holy shit, we're pulling back. You don't really see people investing in certain things. That's how relevant this is. That's how big this idea is. And even if it's a half-ass idea, it doesn't work. And I explain, either $500 billion. I mean, for us, if we're able to take 0.25% market share, because we're doing deals in the metaverse right now, which some subscribers are aware of through our company. I mean, you're looking at over $1 billion in sales at 0.25% market share of a $500 billion market. And that's discounting incredibly, considering we're not looking at we pulled one crazy research report and said this market's going to be $8 billion. Goldman Sachs is 8 trillion, but Goldman Sachs is going to be 12.5 trillion, right? Citigroup is 8 to 13 trillion. Jefferies in the trillions. Morgan Stanley in the trillions. This is across the board of how big this could be. But even if they're that wrong and it turns out to be a much smaller market, the opportunity is that great. But if this market does, and it's not going to happen overnight, but if this market does happen to be that big, holy shit. Now you can see why so much capital is flowing in now, even though we're seeing a market that's, shitty as it gets. But they're investing in the right project, the right metaverse. And if you're looking, just from an individual investor standpoint, I mean, you're seeing big money come in, but even for individual investors, you can invest in a lot of these companies at very low prices because if these guys are right and it is the next $1 trillion industry or whatever it's going to be 5-10 years from now, it's going to give you an opportunity to invest in the Googles, Apples, Amazons, or those next generations of them. And imagine investing in those 20 years ago and where you are today, even with today's sell-off. Holy shit. Instead of having 5 islands, you have 4. Instead of having 10 yachts, you have 3 on the sell-off. Might have to sell a couple. But you get my point. In the internet, you rarely find markets that impact everyone. Everyone. Usually you have these target markets where if it's apparel, it's a target market. Here's my total addressable market. Here's, they're so small. This is the internet where everybody could go to. Imagine owning your own content, having your own ideas. Imagine if you're an entrepreneur. I mean, so many of these people have made a living off of TikTok. Not even TikTok, or you're looking at Facebook. If you're looking at Instagram, YouTube channels. I mean, they've made money in advertising and built up massive files in 1 second, any one of those companies. Google, Apple with iTunes, any one of them could shut you off and be like, F you, goodbye, and you're done. They own everything. Every picture, your pictures you're putting on there, they're making money off of you. Advertisers are paying for your information, which they're giving them for free. Shouldn't the advertisers be paying you? Doesn't that make sense? To target you? Doesn't that make sense? We need a middleman to do that? That's what Facebook's doing. Hey, we got a great idea. We're going to freaking just take all the information that you're giving us, and we're going to give it to these advertisers. We know exactly where you are, what you're doing. They could sell you all shit. We're going to make a fortune off it, not you, even though it's your content. Think about it. Think bigger. Because when you think about this concept, this is something that is massive. And I thought it would take a little bit longer to develop. The amount of money it's pouring in, and even the investments that we're doing in this industry are incredible because we found what I believe is to be the best metaverse by far, where Facebook's not really the metaverse, Roblox not really the metaverse. I mean, you could say that, they'll say that the metaverse, Fortnite as well, even Decentraland Sandbox. Those are one-way streets for those guys to make profits. The metaverse is a decentralized, permissionless system where everybody benefits. You own the real estate. You own everything. You could build on it. You could have a job in that economy, build a business. You could venture, hang out, play games, do whatever you want, but it's a whole new world where everybody benefits. So even though you see in the metaverse with these guys, this is more like, how do I pull money? It's the reason why Facebook said they're going to collect 48% from developers. Holy shit. I mean, you're pissed off at Apple and what they're doing with their app, and you're charging, you said you're going to charge 48, you're taking 48%, 47%. The metaverse that we're investing in is taking 5%, which incentivize these guys to continue to build and build and build and build. And that's the metaverse. It's an economy. It's something that's going to be on its own. We're going to decide everything. We're going to build it. There's going to be incentive. You're going to be incentivized to build it. And it's not going to just be one metaverse. There's going to be few, and the one's going to be like a cable company. Ones who have the best content is where people are going to flow to. But that's a new world of the internet where you control it. You make money off of your own content, where everything you post online, you're not making money off of. You have to share it with somebody. You have to be on a platform or whatever, which is bullshit when you think about it. That wasn't the way the internet was designed for. So the chance of this happening, not happening, are very, very low. I researched this to death. My biggest risk was, we're probably early to the party, which I am to a lot of trends. That's one of the mistakes I make, where I'm early to it, and then, a lot of times they eventually work out and we do very well. But this one, I mean, the amount of money pouring in, it's not just a bunch of people out there and investment firms saying how big and trillions this industry is going to be, which is just, bullshit at the end of the day. Follow the money. Billions are flowing into the metaverse right now, and it's getting bigger and bigger, and it makes sense. All the retailers are getting it. All the major technology companies are getting it, and you're going to see it happen a lot sooner than later. So it pays to start throwing money into this now. That's how I feel about it. So guys, any other questions, comments? I'm here for you. I mean, I got some more questions here, and you know what? I usually keep this to 30 minutes. I'll go another 5 minutes because I have another good question, okay? Because I want to be here for you guys. So this one was from Matt, and he goes, hey, Frank, I have no doubt EVs will be the future of the car industry. Is Tesla going to be the clear winner? Is it worth buying here? Who else will be the winners? There will be winners. I really like Rivian here. I mean, inside of buying, they have the best technology for GM, but there's just a massive shortage of lithium, guys. And I think nobody's really talking about that. I talked about how these guys say they all have the technology for 18 months. The supply chain concerns are okay. They don't have the technology yet. They can produce a car or two and show it to you. I mean, I drove an amazing, it was the XI for BMW at the Consumer Electronics Show. All electric, is amazing. They can't produce it at scale. You're not seeing anything else out there. So the shortage of lithium is very, very serious. And that's going to make the price of these EVs, which most are expensive now compared to gas cars, they're going to go up sharply. I'm not talking, 3-5%. I'm talking about 20-30% more. There's a massive battery shortage. I mean, most companies don't have the technology yet to make EVs on scale, other than Tesla. Tesla's going to be the clear winner. However, Tesla's down, 35% from its highs now? Yet still trading at 70 times forward earnings in a market where consumers are pulling back on spending. Are they going to spend that much on a Tesla now? I don't know. I know it's religious. I know they love it. I know they're great cars. I'm aware of it. I know the stock better than most people. I know their products better than most people. Coming in for a long time. But we're in a market where we have high inflation, which is going to moderate, but still remain high for some time. And we're in a market where the Fed's raising rates and shrinking its balance sheet. So it's going to be a continued tough market for growth stocks. With a massive premium they had and deserve, where rates was zero and the Fed's pumping money into the markets, and they deserve to trade 30, 40, 50, 60 times forward earnings based on that expected growth. And Tesla has filled in a lot of that. I mean, I would say 3 years ago, holy shit, you're looking at cash concerns and stuff. Now they're blown out of the water. Demand is there. They're making money. They're doing great. Seeing supply chain concerns as well, but they're still trading at a crazy multiple, considering it's not going to be a growth market at least for another 12 months, at least, probably longer, where you should be buying stocks at 70 times PE, where you could buy most of the S&P, about almost 25% of the S&P below 10 times forward earnings. But Tesla will be the winner. I don't know if I'm buying the stock here, though. At this multiple, you're going to see more competition come in, but the shortage of lithium is very serious, considering how all these EVs play the scale. They want to produce how many. I mean, just go back to, I'm not going to waste your time. I don't want to waste time here, of how much the expectations of Ford. If you go back like 5 years, everything was supposed to be, they're supposed to produce millions of cars now, right? So now they're pushing it out, but just go to 2030 and look at how many EVs and just go over the projections that these guys are predicting. If they're right, I mean, where they're getting the technology from, that's why I was always wondering why Ford, they should have just bought Rivian. You made the investment. It was a great investment when they did the IPO. Unfortunately, your shares were locked up and the stock crashed 75% before you could sell, right? That's Ford. Ford going back to its old roots. Everything always goes wrong for them. But the EV portfolio looks great. GM's looks great. BMW's looks great. Honda looks great. How are they going to produce this en masse? Just on scale. They don't have the technology. Rivian has the technology. That's different. I wouldn't be surprised if Tesla comes and buys Rivian. That would be a great investment right now, especially, the stock's down 80%. You have insiders buying. How many EV companies do you see insiders buying right now? That's a good question. I only saw Rivian. Why are the insiders in Ford not aggressively buying here? Maybe they are. I don't know. Or GM, because you told me your stock, everything is great at 425, right? And what is it? Where is it now? I don't even know. I haven't looked. 10, 11? You should be buying hand over fist. And at $30 billion you're going to spend, why don't you take $10 billion out of that and buy your own stock back? No. Because we don't have the technology to produce these things on scale yet. And where we're going to get the lithium from, we don't know yet. But Tesla knows. 2 gigafactories built, Texas and Shanghai. Now they're producing those cars in California as well, which they've always been doing. But, they're well ahead of the curve. Well ahead of the curve. And they're seeing those numbers. They're seeing the growth. They're coming out with the new products. Okay, there's going to be competition now, but, Tesla is still the king. I just don't know if I want to invest in Tesla here at trading at this valuation, and I don't know what's going on with Twitter and how much shares they had to sell, Elon Musk got to sell of Tesla, whatever, and speculation, all the bullshit. I'm just saying at 70 times forward earnings in a market that's no longer a growth market is, you're taking on a lot of risk here. And you're hoping that they're going to make their numbers, even though they just admitted that they have huge supply chain concerns. So that's my thoughts right now. So guys, that's it for me. Questions, comments, tomorrow's podcast. Email me, frankcurzioresearch.com. I mean, tomorrow's podcast is going to be a great interview. So next week, I'll come back with those questions. But send me all your questions, guys. I'm here. I know the market's tough. Every single time we see a market where We see a 2%, 3% rise in the NASDAQ almost immediately the next day. It gives it up just like we're seeing today from yesterday. So I know it's tough markets out there, but there's lots of great ideas I'll help you find. And I'm here for you. So any questions, comments for next week, frankcurzioresearch.com. And I'll see you guys tomorrow with a great interview. Take care.